All right, so we have some good people. I'm excited. Just give it a couple minutes, let people come in from the waiting room. There's Tyler, I see. Hi, Tyler.
Hey, Betsy.
Everyone. I'll just admit a couple more people. Great. So I think we can get started here and welcome everyone. Oh, I see Samantha there as well, like screen. So welcome everyone to our 4th episode of season 3 of Miles. I can't believe we're on season 3 since we kind of came up with this during COVID, these masterclasses in innovation, leadership, and entrepreneurship, where we kind of just bring together awesome talent with great perspectives on various aspects of entrepreneurship. And today's is all about angel investing, and we're going to cover really what it's like to be an entrepreneur and what it takes to pitch to angels, and then hear from angels about how to also become an angel, because there are a lot of people out there who ask me that question quite often of how do I become an angel? What does that mean? It becomes this nebulous thing. So we have some amazing speakers today and some amazing resources to share with everyone. The Miles Masterclasses this season actually is a special production between the Women's Entrepreneurship Initiative, which I'm the executive director of, the Office of Alumni Relations, which is represented by Cesar Hernandez and Lori Bishop, who are on the call, and then also the Venture Mentor Network with Wendy Eaton. So we're very thankful to be participating all together, because it's like great when Northeastern different groups come together to really produce amazing content. So without much further ado, I wanted to say this is supposed to be a kind of casual conversation. I just really like to have that. We're all sitting around a kitchen table, getting to know people. Majorie, Katya, and Jodi are here to really kind of meet you, ask your questions. They're going to really have an amazing discussion all about the topics we discussed, but please use the chat. We have found that these Miles classes are much more fun for all of us if we can chat, ask questions, connect with each other, find other resources for each other. So, and if there's anything you need from me, just DM me. So I will turn this over now to our 3 panelists. I'll let them each introduce themselves, and then Katya will take this forward. So without further ado, we have Majorie Radlo-Zandi, who's a Northeastern alumna from the class of 1983. We have Jodi Collier, and then we have Katya Pourteymour, sorry, who's just a recent graduate. So Majorie, do you want to kick off and introduce yourself?
Oh, sure. Happy to be here. Thank you, Betsy. Great class. So as Betsy said, I graduated from Northeastern in 1983 and headed off to Silicon Valley and basically had a career in go-to-market strategies with various software companies, and then headed back to Boston to lead a diagnostic company that wanted to do business in all over the world. And so I led it to growing it to about 100 countries, then led the effort to sell it as well to a multi-billion-dollar company. And then what I did is I was in the business and ran it as a business unit for this public company. And I kind of missed the entrepreneurial ecosystem, became involved with the venture mentoring network. I'm still part of that. And also became an angel investor with Launchpad Venture Group. And Launchpad is the 3rd largest group in the US, and it's the largest in the Northeast, focusing on tech and life science, and also Branch Venture Group, which specializes in food technology. I'm also a board member of a Northeastern company, QSM Diagnostics, and an advisory board member as well on Addition Beauty, also coming out of Northeastern. And I am a contributing writer for TechCrunch also. Thank you.
Thank you, Majorie. Jodi, do you want to introduce yourself after that great tee up for Launchpad?
I know, Majorie. Thank you. You made it very easy for me to just jump right in here. I appreciate that. I'm just delighted to be here. I always enjoy meeting with the very bright Northeastern crowd. So I'm grateful for the opportunity to share a little bit with the group. I met Marjorie. She's one of the 180 individuals who is part of the Launchpad Venture Group, which she explained invests in local area startups. I'll talk a little bit more about the group, but my role is that I'm the executive director. Been here for about 9.5 years now. So I've seen thousands of startups come through our system. And, I'm just delighted to be able to share a little bit about what I've learned along the way, both from the investor side and also from the founder side. So really what we do is we put about $10 million to work in the ecosystem each year, sort of as a collective unit of 180 individuals. So we call ours a network. We'll talk about funds as well. But yeah, I'm just delighted to talk about early stage funding and thrilled to be here. So thank you.
I guess that leaves me. Thank you, Betsy, for putting this on. Hi, everyone. My name is Katya Pourteymour. I am a fresh grad as of a month ago from Northeastern University. So it's amazing to be able to give back and be a part of this as an alumni, only being a month of being an alumni. A little bit of background about me. I studied finance, entrepreneurship, and design at Northeastern, completing co-ops at BCG and PwC. So very big consulting focus specifically in the mergers and acquisitions space. But during my time at Northeastern, I was also able to start and be a co-founder of a $2 million venture fund called Huntington Avenue Ventures. We just raised last year, so we've invested in 18 companies within our first year. And that's been an amazing experience just to reach out to the global Northeastern community and then as well as learn about being an investor and then working with these startups as well. So being able to learn from such a young age and a fresh grad, all these traits has been an awesome experience that I would love to share with all of you. So yeah, I think if it's okay, we can kick off for the moderated questions that Marjorie and Jodi, we can start off with how do you recommend becoming an angel? If you could give a little background of your involvement with angels and maybe if you ever decided on joining a syndicate or kind of just playing the role of angel yourself. Jodi, do you want to start off?
Sure, I'm happy to. And I've dabbled a little bit, but to be clear, I work more with organizing the angels rather than being an angel myself. So I'd love to talk to you about what I consider an ideal angel investor and sort of what they tend to bring to the table and look like in our group. So you can either be an individual, which, frankly, I talk about angel investing. It really goes back to the beginning of time before we even had ways of doing business. It could really be just a neighbor lending some, flour so that their neighbor could start a bakery business. And then they would reap some of those rewards because they helped them just get started. It was seeding a business. And that's obviously evolved into something a lot more, sophisticated today, but that's really the genesis of it, is getting involved at the base level. And anyone can really be an angel investor. There are, parameters as far as what clearly defines, as far as the SEC, what you need in order to be called an accredited investor and therefore able to really participate. But once you get started, many of the folks that I know really begin oftentimes, frankly, with people that they meet in school, and they're like a colleague, a friend of mine, somebody I knew from Northeastern was starting a new venture and they needed a little bit of capital. And because I know her and I believe in her, I was able to, help her and get started on her vision at the very early days. And, from that's, sort of the very beginning sort of friends and family thing. Where I get involved is usually just right after that. And so the folks in our group, and as I said, we have 180 individuals, they come from all walks of life. And that's actually, that diversity is what makes us really good at what we do. We're taking people who have had different experiences and expertise and bringing them together to think about these different opportunities. So they are scientists, they are founders, they are finance people, they are doctors, they are, people who have done all kinds of different things and are able to bring their unique set of eyes to the opportunity and think about it. Those are the ways that they're different. The things that they have in common, they are just jazzed to learn about new technologies. They love founders who are just excited and have the passion for breaking barriers and finding new technologies and doing something disruptive and different, and having that eye for saying like, gosh, here's a real problem that requires solving. So they just love that sort of thing. And that's what I would say brings them together. They are curious, they are helpful. So they are not only in it to be like, hey, I want to get a great return on my investment, but it's also about being helpful to young companies and being able to say like, hey, these are some pitfalls I had along the way. I want to make sure that you don't fall into the same ones. And so sometimes that's another way that I would say really defines the people who I see as angel investors.
I can add in a little bit too. In terms of finding the right angel group for you, I think what a lot of angel groups do, and certainly Launchpad does this and Branch does this also, it allows you to come to a meeting, which I think is terrific because there's got to be a fit on both sides. I sat into a number of those meetings in different angel groups that were interested in my participation, but I had to find the right fit. And what helped me find the right fit was actually a colleague of mine who introduced me to a Launchpad. Certainly I met others at different conferences and I went to other angel groups. It just wasn't as much of a fit as Launchpad is. And then actually Jodi told me about a Branch Venture Group, which specializes in food and food tech. I'm very grateful for Jodi to tell me about that because my background is in diagnostics, specifically food diagnostics. So that really fit well. So it's really finding that fit and the angel group that works for you. But I think it's much better to work within an angel framework because with angels, as Jodi mentioned, there's come from many different backgrounds. So, and a lot of this is sourcing different companies that are out there, but also doing the diligence to see if it's the right fit, and from an angel figuring out where maybe there's a potential red flag, or maybe they have to do a little bit more development before investment. But it's having that collective group that's able to really assess an opportunity is really, really critical. So I'd recommend for those interested in angel investment, I would recommend joining a group.
Yeah. And on that topic as well, you mentioned a really great point about kind of you have this ability to share knowledge, and as well as if you're new to angel investing and not sure of how to source the best deal flow or where to start, you can have these multiple sources of deal flow. And especially when you're connecting with people outside of the Northeastern ecosystem, like Dartmouth and MIT, that's a way to experience alumni and make those connections outside of your own university. So those were all great points. Thank you, guys. And I think on that topic also, if you guys could shed some light from a company and a founder perspective, how would you recommend, going about sourcing angels, and when you're getting ready for your next round to see what maybe an angel group would be the best fit for you as a founder that's looking to raise for the first time?
Marjorie, do you want to start on this one?
Yeah, I'll start on this one. So this is, I think one good source is the Angel Capital Association list. I think it's aca.org. And you'll find different angel groups that are either focused on your geography or focus on in your particular industry. Like, for example, Branch Venture Group just focuses on food and food tech, Launchpad, tech, life science. So you want to make sure that you really go into and approach groups that target companies like yours. Also look at their portfolios and you'll see if you're in the same ballpark as that. And then once you see that, go on, honestly, go on LinkedIn. If you don't have a direct warm contact, go on LinkedIn and send an email. I get many, many cold emails from lots of entrepreneurs asking if this is of interest. Typically what I'll do is I'll ask them to send, sorry, that's my dog shaking in the background. Anyway, these type of things. Anyway, they would send their PowerPoint to me. I'd look at it, see if it was a fit. And if it was a fit, it would go from there as far as introducing to the group.
Yeah, I think Marjorie said that really well. I think it really comes down to alignment. There's also different stages and different vehicles that different groups may use. So that's another important thing to keep in mind. So for example, Launchpad really prefers companies that are looking for price to equity rounds, whereas some groups may be very comfortable with safes or other forms of convertible debt. So that's another differentiation. So the more you know about what you're trying to accomplish, how much you're trying to raise, what industries each group looks at, you're just going to end up being more aligned. And what I will say is the groups are very, we're not really competitive, I would say in general, we're much more collaborative. So for example, when Marjorie was talking about Branch, I was so delighted when a group in Boston wanted to get started to serve the food and beverage and restaurant tech community, because that was a hole that wasn't being filled. And I wanted to make sure that those entrepreneurs were getting the funding and the attention they needed. And so it's wonderful for us now to be able to have a place to refer entrepreneurs that are looking to raise funds from people who know that particular industry. So there are some groups that are much more focused, like on just clean energy or on med device or on different verticals, like groups that focus on female founders, for example, or founders of color. And there are just different ways of approaching how you're going to find the fit. But the wonderful thing is that there are angel groups focused and really geared towards all different types of ventures, which is great.
Yeah, those are all great points. I think the one thing I will have to add as well is, as a founder, I think it's really important as well, you have a really strong mentor group and as well as a board that you could approach people with a question. Hey, have you heard of this angel group? Or do you think this is a right fit for my company, given that you see it from an external lens as well? That way that you just have more than one opinion. I think that's always important to trust your gut, but also, due diligence on them by reaching out to your close network of advisors. I know advisors have come to play really heavily a big role in the fund when we were first starting out. So that was a great experience I've had for sure. And then to move on to the next question, I think we touched on this briefly, but could you guys kind of dive in deeper on the different types of angel groups, not necessarily in terms of different industries and categories that we've touched on, but more of, there's less formal, there's angel lists, and some have been shifting into more casual groups that are going into earlier stage before they even have a product. If you guys could touch on that, that would be great.
I'll give it a first shot, Marjorie, and then you'll back me up. Yeah, there's a real spectrum, to be honest. And I would say, where I live at Launchpad, we're on the more formal end of things as far as people need when they show up for Launchpad. We have something called the Catalyst program, which is quick pitches. It's a little bit less formal, more of a networking event. But then when people come to our main forum, they're looking to raise between $1 and $2 million in priced equity capital. We have clarity around our due diligence process. We like to lead our rounds. So it is pretty buttoned up, and the expectation is high as far as a company's ability to answer questions around validating their market and things like that. There are some, though, that are a little bit looser in different ways. So sometimes looser in terms of geography, for example, is something that's really been a shift in recent years. We, as I was going to say, are just geographically focused on the Boston area pretty much. There's a group right now called Tbd Angels, out of Boston. That's an excellent group, and I highly recommend that you guys check it out. All of their meetings are literally virtual, so you can, and they're recorded, so people can go back and look at them when it makes sense for them. It's just a very different approach than what we've done before. The check sizes can be smaller, and the due diligence is a little bit lighter. Becoming a member is less expensive. Different groups to become a Launchpad member, and Katya, I don't know if this is helpful to go in this direction, but sometimes you're a member of a fund, meaning that you're then going to pay transactional fees like management fee and carry. And then there are other groups like Launchpad that it's an annual dues. So it's more like a club model, if you will. And TBD is kind of in the middle. They have a small fee, I think, to join the group. And then it's on a per deal basis. So different groups are doing it different ways. I'm glad to see that things are shifting. I think that's one of those upsides of this weird time that we have been living through. I mean, Betsy mentioned this, the third year of doing this pandemic show. But there's some good stuff that has come out from it. And one of them is that entrepreneurs are getting funding really quickly and very efficiently, without ever having met an investor in a face-to-face way, but rather through an online presentation. So I think it's wonderful. I think it's great to be able to connect with people in that way. And I think investors are getting more and more comfortable with that. If you had asked me 3 years ago, if we would have invested in a founder, if we never had the opportunity to just meet and, look her in the eyes, I would say that would be, really strange to even imagine. But the world has changed, obviously. And I think many angel groups have shifted with that.
The only thing I would add, and that was great, Jodi, is there are a lot of accelerators that have an investment component to them. Like, for example, for clean tech, there's Clean Tech Open, and there's an accelerator that companies go through, and at the end, they're introduced to investors, like Mass Challenge, same type of thing. Techstars as well. There's lots. There's Expert Dojo that's in Los Angeles that does this. There's also Startup Boost in New York City. So there's just an awful lot of accelerators that have added on the investment portion, but that's after you've gone through their program as well.
Yeah, and then one thing I will add on top of that, another great source is Angelus Ventures. For us, when we were starting out, specifically fund-related, fees for legal can get really, really high, especially when we were just raising a $2 million fund, so we didn't have that capital to support those legal funds. And they're a great way. They take 1% of the committed capital, and it's capped at 20K, depending on, it doesn't even matter how much you raise at that point, it's capped at the 20K, which is great for us. It also is a great platform on the investor side. You can sign up and basically you'll go through the procedures of ensuring that you're an accredited investors, and it gives you access to different funds as well as different startups. A lot of the companies we've invested in also have used Angelus as their platform for funding as well. So when we were, putting in our capital, that was their main platform for doing that. So that's another great resource to check out as well. Awesome. Well, we'll continue on. I think the next question that we've gotten was, what if you don't have friends and family connections that are willing to invest? Maybe your network's not broad enough, or you're not sure if, that's an uncomfortable question. What's a recommendation you guys would give to approach, other people outside of your network?
So that's that's the challenging part. And I think that's where, honestly, some government programs need to come in, and sometimes universities fill that gap too. I know Northeastern has several prizes to that. If you're in the life science arena and technology arena, there's also a lot of non-dilutive funding with grants, and that's a terrific option too. But I'll talk about one Northeastern company, Mbeba, and Tyann, the CEO of that business, basically funded it. She didn't have the friends and family round or enough of it to get started. So she funded it on her credit card and got quite, she had a lot of confidence in her venture. She paid herself back. She received a lot of angel funding, and she's well on her way, but that's quite a leap of faith. You've really got to believe in your venture to do that. And a lot of times people just save and bootstrap. That's another way to do it. Or what I've seen with some Northeastern Ventures, they kind of do double duty. They have a full-time job and build up cash that way while they're building their venture. And at the right time, when they're able to get investment, they kind of hop off their full-time job and really put their energies into their venture.
Yeah, that's the hardest moment right there, and putting money on your credit card sort of scares me a little bit, to be honest. So I love believing in yourself, but you also have to be wise and careful and make sure you can cover your rent and other important things like that in life. But yeah, I think it's getting over that initial hump and trying to get enough people to really believe in you. Sometimes finding a co-founder who's going to come on the journey with you can be extremely helpful, both financially and morally, sort of moral support. So yeah, those are other things to think about.
Yeah, and I'm going to touch back on the mentor advisor network that you kind of create for yourself throughout life. And I think I'm at a period where, I rely on a lot of my professors and people I've met through the fund that are just my life mentors, I consider. So I think really building those connections, those people have access to a lot, and, they can share so much wisdom given that they have industry experience that you may not have. And I'm sure they're willing to connect you with, different opportunities of funding, as well as just reaching out to your alma mater. A lot of different schools have the model of Huntington Avenue Ventures, of investing in their alumni and showing support that way, without taking too much ownership as well. So a big topic of conversation right now is just given the volatility in the market. I think that's a big question of on the investor side of things, as well as on the company side of things. When people are looking to raise in the near future, I feel like there's been this sort of fear. So a question for you guys would be, do angels still invest during a recession?
I would say 100% yes. We've saw, 2008, 2009 were actually some of our biggest years for investing. It is something that angel investors, particularly who've been around for a while, realize that this is a long game. We do not anticipate getting a return on our investments, for 7 to 9 years. These are very long holding periods, and we know that there are going to be many ups and downs between now and the time that we're going to be able to see a return on these illiquid assets. So we are not afraid of investing now. And in fact, we're starting to see valuations come down, which means that it becomes more attractive for angel investors. And there's still a lot of capital, in my observation, there's a lot of capital floating around that's interested in this, early stage end of the spectrum.
Yeah, I would agree with everything that Jodi said. And I'd also add that it is attractive in terms of valuations. But if you look at what other vehicles you can go into right now, if you were at a bank even or a bonds, the yields are not that high. The stock market's going down. This is a great opportunity to get involved in some exciting early stage ventures that can be extremely interesting.
Yeah, 100% agree. For someone who's a new investor like myself, I see this as a tremendous opportunity to just save as much as possible. If stocks, and this may be a good time to just, if you're new to the market, a way to get capital and then start angel investing. I do see this as an amazing opportunity for people that are young and old, all ages, to, if they're not used to angel investing or would love to get involved, it's a great opportunity. And definitely reaching out to these companies and establishing that network now, I think is a great time for sure.
Yeah, Katya, I'll be interested to see, 10 years out, how, your 2022 fund did, because I have a feeling it's gonna yield some really interesting things.
Yeah, we're really excited. It's a really interesting period to raise a fund. You know, we've had a year, we've had 18 investments, and now we are looking to make more investments as well as follow-ons. And I think what better of an experience than now to go through COVID as well as potentially a downfall in the market. You know, it's really an amazing learning curve and period that a lot of people did not get at such a young age, to go through a global pandemic alone. So yeah, I'm very excited as well, Jodi. So we've covered a lot of these questions. So I think we can touch upon, in terms of valuations, we touched upon this a little bit, but what have you been seeing this past year or, you know, during COVID, and what do you think? We were discussing that valuations may come down a bit. What do you think, you know, is going to happen in this market, and if it's better for investors, or is it worse for companies? I think if you can share some light on that, or if it's better all around for people, that would be great.
I could start on this. I think it's actually a good time for both. However, if you're a company looking for funds, I'd make sure you have enough runway. So give yourself enough time, because the process may take a little bit longer, and also you may have had an idea about a valuation, but try to be a little bit flexible in terms of not completely out of the ballpark, but fairly flexible in terms of what you're willing to accept in terms of valuations, because I think as a whole, they're coming down quite a bit.
Yeah, I would say, just to add to that, it's a great point, Marjorie. And when you talk about, you know, time and runway, and the fact that as an entrepreneur, you don't want to be always in fundraising mode, even though you kind of are. It's like, what we like to see is that a team is going to raise enough to really hit some milestones within 12 to 18 months, and then be able to come back and say, hey, we did these things. Now we need to raise some additional capital in order to do the following things. So that sort of 12 to 18 month time period is the way we think about it. And just to sort of share sort of our, you know, model, given the amount of risk that we're taking on at this stage of the game, our group in particular, I would say, and it's not unusual to see this with angel groups our size at the stage that we're investing, we believe it's appropriate that we take about a 25% value of the company if we're at this stage of investment. So by that, I mean, if a company is valued at $3 million pre-money, and we as a group put in 1 million, afterwards it's then, you know, valued at 4, and our 1 million is now worth 25% of the post. And we just think, given what we're doing, that's what we think is a sort of a nice ballpark way to think about things. At least that's what we believe at Launchpad. And we've tried to be pretty disciplined with that. There have been, I would say, quite a few experiences in the last 2-3 years in particular, where a team that we're working with is like, yeah, well, you know, somebody on the West Coast is going to give us, you know, the same amount of that $1 million, but on a $10 million pre, and we say, go for it, you know, if that's going to work. But it's also really hard then to grow into a company that's valued so high when you're very early. So it's a fine balance. And I just wanted to share that that's a little bit of how we think about things at Launchpad.
Awesome. And I think we have 2 questions from the chat that kind of go hand in hand on this subject. But how does an entrepreneur think about valuation when approaching angels for the first time? And then Samantha had a question, if there's a certain amount of money you should have raised prior to reaching out angel investors. So I think those kind of go hand in hand. I'm not sure, Jodi or Marjorie, you want to start off with those 2?
I'd say usually what you see in terms of the amount of money that a company's raise, the so-called friends and family round, usually it's anywhere between 50 and 200K. That's typically what happens, because what you want to do is have some type of proof of concept, and or have some non-dilutive funding, which you're able to show some proof of concept that customers really want to buy your product. There could be still be, and you may have a few beta goings and positive results out of those betas, and a customer wanting to commit. But that's kind of what an angel wants to see, and I think you need about 50 to 200K in order to get there. As far as valuation, that's more something that you should discuss with your team members. And it's also quite frankly, I would have an open discussion with an angel group about this too. I mean, on one hand, you could say, well, the angels are going to want to have it lower, and we're going to want to have it higher. But really, angel groups want the entrepreneur to win. It's not like we're not looking to take advantage. We obviously want to return our investment, but we also want it to be a home run for the entrepreneur and the entrepreneur's team. And we also, most angel groups will want to make sure there's a certain amount of capital put aside for employees now. It's usually about 15% now and later on in the process.
Yeah, exactly. Well said. The only thing I would add to that, Marjorie, is that if you as the founder are in a position to also put some of your own capital into the company, we always love to see that. That's just another, sort of proof that you believe in yourself, and that you are investing even more than just your own, obviously your time and your sweat equity.
Awesome. Yeah, great points from you both. And thank you for the questions, Samantha and Betsy. One interesting question what are the absolute don'ts when pitching to investors from a founder's perspective?
Don't lie. I mean, that's like, like it's don't stretch the truth. Like, just be, yes, we know everything is up and to the right, but just be really be honest. We know that you're so early and messy, and these are super, super risky ventures. We get that. We know that. We love you for it. So just I think that nothing makes an angel sort of more frustrated than just always saying good news, or always saying that, I can do this. Like, you want to be an optimist. We know that that's built into the entrepreneur DNA, but yeah, I would say honesty is really critical. If your teammate is also your spouse or your sister, just say so.
And I would say, along with the honesty factor, is kind of be fairly realistic about your projections. I mean, really, I had one entrepreneur show me a deck. He barely had his concept product. And he said, you know what, next year we're going to do $50 million. And I basically said, like, how is this going to happen? So you could be a little bit optimistic, but be credible and feel fairly grounded and realistic in terms of projections. The other thing is investors don't know your space like you do. So really be open to questions, and don't assume because they don't know something very simple that you know very well, that they should know it. And it kind of goes without saying, but I'll say it anyway, not to be arrogant. It's really important that you be approached your answers with humility and respect.
And one other thing to add on top of those great points, and this isn't actually different from the actual moment of pitching, but leading up to pitching, be really proactive when investors are asking for information from you and are looking for data room access, because when we're dealing with founders that go unresponsive for 2 weeks, we start to become, uninterested, or where we feel like we have to reach out multiple times, or, getting access to simple things becomes a long haul. It does, I feel like, can make it difficult when a founder comes in to pitch, because there's already this internal frustration there could be between, the investors and maybe the founder that, hey, we could have done our diligence a lot faster. you know, especially if you're trying to close a round really quickly. It just being proactive and always being responsive really goes a long way. It really shows you're a motivated founder that really appreciates that someone has interest in you to fund your dreams. So that's one little thing I would add. And then I think Betsy had a question she wanted to ask the team.
Oh yeah, hi. I'm just going to add myself here because I forgot to do that earlier. And then I think Tyler put a good question in the chat. So I just actually wanted to ask, because I work, as you know, in my role with lots of entrepreneurs and lots of investors, and the emotional side of this equation sometimes goes undiscussed. And I think we're all supposed to look at this so dispassionately, but I've seen really able entrepreneurs who have raised their first, like even friends and family or angel round, and they kind of, all of a sudden, the pressure of having someone else's money destabilizes the whole operation. So I just wanted to ask the group of like, have you seen that? What top tips do you have from the emotional side of things from an entrepreneur who might be new to this, and also from the angel perspective of when you do a couple of your first investments, it's like buying your first house, like it's stressful. So can you talk a little bit about that?
I love the question, and it does come up a lot, Betsy. It's it's like a baby, right? When you are having a startup, it really is like this is something you care about so deeply. And, as Majorie said, sometimes you see it and your industry so well that it's like you almost can't even explain it to an outsider. You also love your solution and sometimes can lose sight of like, okay, what's the real value here to other people? So, a couple of things, like number one, when you're talking to investors, make sure that you're pitching the business, not just the product or the solution, but rather the whole business. Angels are also looking for businesses that are going to be sold. So we don't want you to get too attached to it. We want to make sure that you love it, but you want to be able to move it on, because our investment is only returned when there's a transaction, right? So that's a really important thing to keep in mind as far as the motivation of the investor. And with that, the other thing I would make sure is that you find pretty quickly, even before you create a formal board of directors, I very much suggest that you find a board of advisors who can really keep you grounded, who can be the people who will tell you sort of what you need to know and what you need to be able to communicate back to anybody that you do take money from. Because yeah, it does. It changes everything once you've taken someone else's capital, and you need to be able to think about how they're going to, react to getting their capital back, what they want to see having done. They suddenly get a voice in what it, for a while had just been yours or that of you and your co-founders. So I think being able to manage that is important. And I think having a really trusted person on the, sort of either the board of directors or your board of advisors, I think is really critical. And, for investors, what I say is it's a long game. Don't expect things to happen overnight. Diversify. You have to, angel investing diversification begins with 10 companies. It doesn't end with 10. So it's a long road. It's going to require a lot of keeping track of what's been happening, changes and pivots, and talking to people who are in the company and making sure that you're aware of like, okay, so they're coming back for a follow-on round. It's a totally new opportunity. Sometimes you're just tempted to put your pro rata in as a first-time investor, but you don't have to. Every time it's like a chance to say like, all right, if I were to look at this, like, I want to continue to support my founder, but at the same time, maybe I want to double down. Maybe I'm seeing something that's really exciting happening here. So it's really just staying aware, remembering it's a long haul. There are going to be highs and lows, and some of the great entrepreneurs, my hope is always that they have a wonderful exit. Then they're starting another company and another one after that, another one after that. And along the way, they become angel investors as well as founders. So it's all part of this beautiful ecosystem.
And I think, Jodi, you've raised a lot of terrific points on that. And I think that what I could add to that is once you do get the money, it's important to spend it conservatively. Don't, the good times, recessionary times, great times, don't think the great times are going to last forever. They really don't. Make sure you're conservative and have, I'd say, 9 to 18 months runway, at least 12 months. And that's going to reduce a lot of stress for entrepreneurs, because I think a lot of stress comes from, oh my gosh, we are out of money in 2 to 3 months. What are we going to do? And then the stress comes on, because really they need money for continued funding. So I think really being conservative with what you spend, having enough runway is going to really put you in good stead. And as Jodi said, in terms of the looking for advisors or board members, seeing it's not all on you. You're part of a team of both your team who you've hired, but your advisors, your investors, it's all stakeholders. It's not just about you. You're part of a team, and that should also help in terms of relieving some of the stress.
Yeah, and the one thing I had to add to that for founders on the topic of team, a CEO and a CFO once told me, as a CEO, they're the big dreamers and the CFO keeps them on track. So I think a really important part of when you're starting out, if you're the big dreamer and you have the vision, but you may not have a background in, finance or controlling the money, it's great to have someone on your team as early on as possible that can support you in your weaknesses, so that you can, both serve your strengths in different ways. I think that's great to find teammates that complement each other. So that would be my one recommendation. Awesome. So I think we can take it to the chat. Tyler has a great question. What are the biggest green/red flags for an entrepreneur to find in an investor?
I think the question is, you want to make sure that the investor that you choose, because remember, it's your choice as well, who you're choosing to have invest in you, that can offer, honestly, not just money, but also intellectual, human capital, perspective, connections. There's just an awful lot outside of the financial arena.
Yeah, I think if I can add to that really quick, Jodi, I think looking for strategics early on are great. People who are strategic in the field. So, individual investors that have had tremendous experience, let's say it's research or, like in the food space, for example, and have this wealth of knowledge that when you're stuck with a problem or asking for different sources, that one investor has great connections in the industry that could lead you to, a scientist of, a specialist in some way. Again, just not just the capital. And I think one great thing as well, when you're investing early on, find investors that really you feel like are supporting you and you have a really good relationship with, because there can be points where investors are more concerned about the return and they can give you a hard time as a founder. And, you want to be clear to your investors and honest, but it's a two-way relationship as well. You want people that you feel are supporting you because it is motivating. It's not frightening of, oh, they're going to come knocking on my door if I don't hit Q1 return, but more of like, hey, how can I help? I saw you had a road bump. I think having that relationship really empowers you as a founder.
Absolutely. And I also think just as you get started and you take on investors, I think if you can get into some really good habits, discipline of sending out quarterly reports, for example, is really going to just show your professionalism to current and any future investors. And, that's a great way sort of to also tap into their understanding of sort of, their human capital side of saying, hey, I need some help in getting into this particular customer, or I want to make a hire. And asking those questions really clearly is a great way to sort of, I don't know if this is answering your question exactly, Tyler, but of really making sure you're taking solid advantage of the relationship.
Yeah, 100%. Thank you for the question, Tyler. I think we can get into our lightning round. If anyone else in the group has any other questions, feel free to toss them in the chat. But one question I would love to ask is, what is the one mistake you see entrepreneurs make the most?
I would go back to the financial side of things. Just be conservative, but maybe a little optimistic, but really don't go crazy with your projections, because you're going to be expected to meet those projections. And one thing investors don't forget is numbers, what you said you were going to do. So be realistic, maybe a little optimistic, but just don't go crazy in terms of projecting way impossible goals.
Yeah, I think that's right, Marjorie. I would say really the same thing. It's just, you know, sort of the whole under promise, over deliver, which again is hard to do when you're dealing with you know, CEOs who are really, you know, they lean optimistic, but I think it's being disciplined enough to say, like, I know this is going to be really hard and it's going to take a little while and it's going to take some capital, and this is what I plan to do with it, and I'm going to learn, and I'm going to be humble, and I'm going to listen. Those are things that we love to hear.
That's great. All great points from you both. One question that actually just popped up into my mind, and we had touched on this earlier, of, you know, working part-time while building some cash to be able to invest in your company. When do you know, when someone's pitching to you, a common question we ask is, are you full-time? Is your team full-time? Or are you still part-time? When do you think is a great time for founders to make that transition from part-time in their role to full-time? Is there ever a time where you're like, you know, it would be more you know, gratifying or encouraging that you're a full-time and you're invested in this? Is there a time in funding particularly?
I think at the seed round, I think you expect, right? And I don't know that Jodi would have the same perspective, that you would be full-time by that point. But at the friends and family round, I think often founders are working their full-time job and doing their venture part-time. That's what I've seen, because they do, but then they at least have enough funding to get them through the financial process of getting through a seed round.
That's right. And listen, it's also like part-time founder. We also know a lot of these founders. I mean, this is not a 20-hour-a-week part-time gig when you're, you know, doing your thing on the side. We realize that people are really hustling. And as they're working on this, their dream to get their company off the ground. So it's a lot of hours, it's a lot of hard work, and we appreciate that you're still trying to juggle a lot of things. But yeah, I would say it's at that seed stage that we're looking for the level of commitment of somebody that's going to say, like, okay, hey, I'm going to make myself available to really be in front of, you know, customers and be, you know, getting myself out there, and getting a team going, etc. So yeah.
Awesome. And then I think we have time for one last question by Tyler. What is one of the most interesting markets you see founders chasing, either by industry or another standard?
Gosh, it depends who you ask, right? So I think it's I think here in Boston right now, I think there's so much going on with in the life sciences world, and using AI for, you know, things that are related to patient health. And I think there's a lot happening in that arena that I think is really interesting. I think you can layer AI onto so many different things. Yeah, I think the world is changing really quickly, and we're fortunate to have technology that's helping with healthcare. So I think personally that's something that's interesting, but it's just going to depend who you ask. I mean, a lot of people are hot on, you know, whatever. You have to ask them what they're excited about. I think like the sort of the future of work, for example, is one that gets tossed around quite a lot right now, and is one that we can relate to. I know Marjorie has her passions. So
Yeah, all good points. I'd say there's a lot of pollen around. I don't know if any of you are allergic these days. Well, I spent my morning doing an Everywell diagnostic test to see about all the different trees I'm allergic to now in this very, very pollen-filled spring. So I just think that's going to continue on. There's going to be a lot more at-home diagnostic tests, whether for yourself in the clinical market or for in the veterinary market as well. I see that in the future. I also see on the food side, we're going to be eating some cultured meats. We may be doing a little bit now. I think it's going to be much more in the future. It's going to help a lot with climate change, and also, of course, in terms of the cruelty to animals, it's kind of cruelty free. They, from a hair of an animal, you could basically have lots of cultures and have really meat that tastes just like the meat that we're used to, except it's done in a much different way.
Yeah, and one quick thing to add to that, I agree 100% with what both Jodi and Majorie just said. I think the healthcare space is something that needs to be disrupted, especially in terms of the virtual doctors, virtual visits. I think that's a great space. For me, a particular interest to me is ESG in multiple industries, and how the consumer lens has changed, where specifically people of Gen Z and millennials have a prioritized focus on investing or buying from companies that, even though it's $3 more, they know it's a good buy for the environment, but it's a feel-good product. So I'm curious to see the disruptors and the leaders in those industries. And like we've said multiple times during this call, that's a long run lens. I think it's a 10-year lens. So for me, given that I'm in my 20s, I think it'll be a great period to see, who are those leaders in each industry.
Absolutely.
It's amazing. I'm going to jump in here to say thank you to everyone, because we're at the top of the hour, and it's amazing how quickly these amazing chats go. But Marjorie, Jodi, Katya, thank you so much. I mean, what a wonderful presentation. And Katya, like the fact you just graduated from college, like you're hanging in there just like, I mean, like you have so much experience. So well done. I'm excited about what I learned. I learned a lot in this chat, and I've been an angel investor and I've been an entrepreneur raising angel investments, and I still learned a lot here. I really valued the perspective of the friends and family round and how that might not be accessible to lots of people, which is why I actually really love even more now what we're doing at Northeastern with the Women Who Empower Innovator Awards. And just everyone stay tuned. Next week, we are announcing our winners, and we're giving out even more money this year. The headline will be like 22 women are getting $220,000 in 2022, which is going to be super exciting. And we have some amazing winners, and we're in the process of informing them now. But that hopefully will help them get to the next angel round. So thank you guys for participating. Anyone who's listening, you have follow-up questions, contact any of us. LinkedIn is always a good way, but my email is available too. So thank you all, and enjoy your evening. And Marjorie, enjoy Italy.
Thank you.
Ciao.
Bye.
Bye. Thank
Bye.
you.
Thank you guys.
Bye.
Thank you.